What was that? What was that? What was that? I have no idea. Yeah, no, I don't know. I don't know. I'm just kidding. I've been playing around with this thing and I figured out how to do sound effects and stuff like that. So, anyways, it's Ted here with Bodies X Wix and weekend edition special, I guess. And as you can see with the opening scene here, I actually had a good picture with my monkey wearing the good Ethereum hat. So hopefully that brings us some good luck. Hopefully that brings some Ethereum some good luck is what that means. Anyways, nothing too special about what's going on right now, about what's going on tonight. Just wanted to talk about last week's trades and what that can mean going forward. What happened last week was awesome. Absolutely awesome. And if you weren't following along with my trading view, if you hadn't been following along with my videos that I did every day, yeah, you kind of missed out. Again, there's no way I don't have a signal providing service just yet, and that's one of the reasons also I'm here to talk about. I should have it up and going this week. As soon as I do, I'll have it posted, and the link posted in this video. I'll have it posted on my Patreon there as well. So again, if you are not part of my Patreon, it is only $3 a month to join, and that is just for helping support the channel, right? That's just for helping support the channel. That's nothing else. I mean, and what I'm going to offer for those people that are actually joining Patreon early, I'm going to offer them a discount into for the signal service. And I've been looking around at other people's signal services and things like that, and what other people offer, and there's a whole lot of different things that people offer, and there's just there's only I can only offer so much. I can only, in the beginning, I guess I can only offer so much. So I should say that after a while maybe I can take on not project management, but account management and things like that. But as for now, I'm gonna start simple. I'm gonna start with just a simple service, just a simple I'm trying to do some changing of effects here. Trying to do some simple signal services, things like that. And then once I get the signal servicing down, then maybe we can move on to the other thing, right? And so I was looking at signal services, and maybe for people that are members of my Patreon that are gonna get a discount, $20 a month, right? I think that's fair enough. $20 a month for people that have signed up early for my Patreon, supported me, or helping me out. You're paying $3 a month extra already. I think $20 a month, but first, let me go back and start all over again. First, it's going to be free for the first couple months. Right? It's going to be free for the first couple months, just so everybody understands that, that what I'm putting out there is going to be valuable, right? I'm not gonna be like, hey, I'm gonna charge you $20 a month and just put out a bunch of signals that are crap. And then people are going to be really, really upset when they're wondering why I put out signals that are worth that crap. That's not something I'm going to do. So instead, what I'm going to do is I'm actually going to do this for a couple months for free. And that way people understand that the signals I have are quality. Is if you haven't been paying attention to my trading view, especially this past week, you understand that my signals are actually good. I'm not taking these from anybody else. I have a mentor. My mentor teaches me stuff about the dollar and about, you know, Euro USD and about GBP. The signals I have been giving have been about S&P and NASDAQ, right? So I am taking what, you know, I'm learning from, you know, it all follows to kind of the same kind of thing. It's basically just about candle reading and knowing how to read the chart. I'm taking all that into consideration, and I'm putting that in, and putting that into, you know, those kind of signals. So what mostly of my signals will be is they will be probably S&P 500 signals. They will probably, you know, NASDAQ signals. There will probably be some, maybe not very many, but there will probably be some Forex signals. If the Forex signals do come, they're going to come early, and that's the thing. And that whenever I put out these signals, is that it's going to be, you know, again, I'm an early riser. You know, I have to get up for work, you know, at 4 o'clock, get ready, be at work by 6. And I'm gonna be studying and putting out signals in between probably 6 o'clock, or probably not 6 o'clock, sorry, 7 o'clock a.m. and 11 o'clock a.m. and that would be Central Standard Time. So if it's Eastern Time, then look for them from 8 to noon, or Pacific Time, look for them for between 6 and 10, something like that. That's pretty much where they're going to be coming out at. And that's why I'm trying to focus most of my energy on the indices, is because the indices usually they have their signals, most of their signals come out and are more predictable right around that 8:30 Central Time, 9:30 time slot, right when the bell opens. That's the most predictable way to get those going. As for Forex, those are a little bit harder. Sometimes you have to get up earlier and read what happened before, and then, you know, kind of figure out if you're going to be able, and then most of the time after that, I'm trying to figure out how I'm just going to scalp it or not. Sometimes there might be a good read, sometimes there might not be. So, but I'm just kind of giving you a plan, you know, as far as moving forward, as far as what my signal service is going to look like, okay? You know, what it's going to entail and what you should expect it if you plan to harden it. So basically, you know, that's it. That's basically it in a nutshell. You know, I'm, you know, putting it out for free for a couple of months. Should be out probably sometime this week, especially after what, you know, this week's, especially after what happened. I feel like I'm getting more ready, you know, to actually start putting out signals for people, and that way, you know, they'll start to trust me more, and then eventually by summertime hits, that's when you'll probably have to start paying for them. That being said, why don't we go ahead and go over some of the signals that happened. Why not? And go ahead and take a look at and see. One second here. Some reason not happening. Yeah, I quite want them to. Hold on a second. You guys do hear music, right? There is music playing, correct? At least I feel like there should be music playing. There is music playing. Okay. Why is that on? Oh, I see what's happening. Never mind. Okay, hold on. One second. Oh, there we go. Love on my part. There we go. Okay, anyways. Got it all fixed. Alright, so, yeah, let's just go ahead and take a look at some of the signals. Now, first, what I'm going to do, I'm taking a look at Ethereum right now, because I am in an Ethereum trade. I didn't put a signal out. I didn't put it on my trading view because I wasn't for sure if it was worth it. I didn't want to confuse people. I didn't want people to lose money over this. They were to follow me. And again, I'm go ahead and throw it out there. This is my channel, and I can smoke on it if I want to. So I'm going to. Sorry about that. So, I saw with Ethereum here, and I screwed up on this already on Ethereum, and I've lost a little bit of money on it. But I have a feeling it's coming back, and I have a feeling that we're gonna be okay. So, whenever I first, whenever I saw it coming up here. And I saw, you know, the buy side liquidity sitting here, and you know, I saw that this is back over in here whenever it started making its run up, you know, around 4 o'clock, and oh man, I was like, it's actually gonna make a run for that liquidity. And then once it got close, I actually put in for a, you know, I wasn't trying to chase it. I was just thinking, you know, wherever I buy, it's probably gonna pull back a little bit and keep going, and essentially break the buy side liquidity, and at that point I'll pull out and done with. And then once I did that, it started falling backwards, and I took a closer look at it, and I realized what had happened is that because if we take a look at schematic over here on this side of the chart, and this is a 5-minute chart of Ethereum here, you have this big down candle right here, right? You have 2 big down candles right in a row, and on the second big down candle on its high, basically you had no candle that moved back up into it. Basically have this big open zone that was just kind of a gap left open. We have no idea how much price actually skipped over that or anything like that. All we know is that it just moved down. That's the thing with charts like this. It doesn't show you it, you know, it's not going to show you every little gap that price, you know, skipped over, anything like that, because it'll reprice and price and reprice and price. You never know, like, if it ever skipped over things. So what happened is that put in for the buy when I realized, because what I saw on my part was that it had broken this high. It was coming up close to breaking the next high, and then so I threw in a buy close toward the top. And then I realized that there was a fair value gap there. It had closed it in. That's what made it reject app. And I was like, crap. And so I didn't know what to do. Honestly, what I thought what was going to happen was I saw, considering this was going to higher price, going through higher prices, we had this high, this low, and this high. I thought that since had higher prices going right here, was going to turn into a breaker, right? And I thought that this was going to eventually turn around and make it go back up. And it did for a second. but then it turned around and went back against me, and that's when I realized. So once it got below this right here, well, actually I wanted to wait to see if it got below this, if that would enter value gap this up, and it did, and then it started coming back down again, and it just kept doing that. And eventually I manually jumped out of the trade. I think I went from somewhere from, I'll even look, like, just where it was. It was 1728 to 1714. Well, I jumped in at 1728, right where it shows where my X is right now, and then of course I jumped out at 17 because I knew that it was gonna keep going low. But then now I did jump back in. Surprisingly enough, at 1714. Well, the thing was is that I jumped out at 1714. The thing is that it actually got a lot lower to about 17. I forgot where it was. Should have got in around here, but as it was going up, it got to about 1710 or so. I want to say, I saw it do this. Right, I saw this candle here being an engulfing candle, as it being an engulfing candle and smaller retracement, and then I saw this candle start being an engulfing candle here. That's when I jumped in after this candle broke the red candle here. And because Ethereum does have $4 spread, fortunately that's $4 spread, unfortunately that 1709 turned into a 17. So yeah, so what, I lost money, but either way, that didn't happen. I would probably be, I mean, it's at 1723, and I got it at 1724. I would basically almost breaking right now with kind of what I'm basically at the same. But either way, I actually just got it at a better price. I got it at 1714, but at 1714 it's not the same as what it is here. Here the 1714 on MT4, the 1714 is more like a 17, more like a dollar. That's why I have this green arrow marked out, because that's about where. As you can see, we're well above the entry, so we're doing well on this on the second trade anyway. And I do have my take profits 40. The reason I have my take profit at 1740 is because of high liquidity. But I do have to watch out for, though, in new starting 12:30. I'll try to stay awake for a couple more hours. Actually going to get into this fair value same, or you pull back, do a whole stuff. Don't want. That's what I'm gonna be trying to watch out. But what I do think, right now, is that we did have this high, we had this low, had this higher high. You have a breaker right here. I have a breaker right here that is acting as support. So that's the good thing, and that's why it's staying above. So that's why I'm not too worried about this trade right now. And especially when I was in the trade down here and I was seeing that it was doing a lot of this, going back and forth and back and forth and back and forth. I drew this green line telling myself that basically this was engineered liquidity. What I mean by engineered liquidity is that the market makers were making it seem like it was going to sell from, right? It kept coming up here, it kept selling. It kept coming up here, it kept selling. Even though it looked like it was going up, it made it look like it was going to be one of those things, like you always see people draw, like, oh, it's going to do this. And then this line right here is going to come over here. This, and then what's gonna happen is that it's probably gonna hit this and then fall back below it. People believe in that kind of stupid, triangles. It's really not what, not at all. I mean, people could look at that and call that a triangle if they wanted to, but if you're a smart money trader, you understand that's not a triangle. You understand that it was engineered liquidity. Engineered liquidity, getting people to sell around in this area just so it could buy and go. And then because of the breaker that is down here and that it passed up through it and it came back down, now that's what smart money is all about, guys. That's what smart money is all about. Don't know what smart money is all about. That's what understanding what is happening in the current market, how people play games, how the market makers play games with people to make them try to trade a specific way. And if you can understand how they think, then you can trade against them, or you can trade with them, however you want. But the more you understand how the market makers think, and the more you think like a market maker, better off you are at making good trades. Now, in the very beginning, my thought process was there. It was still there in the very beginning. Hey, we had a high that it was moving up. It was getting higher. We had an intermediate high that was broken, and then we also had another high over here. That was the way I was seeing it. Was Ethereum was way up, and then eventually going to buy side. So that's why I just jumped in at the wrong time. That's all it was. I made an emotional decision. I think it through, and I just bought it thinking that it would just fully make its way up buy side liquidity, rather than actually taking my time to actually do my due diligence and study market and see what was going on. And that's why I'm not too worried about 17. $17.19 maybe. Got right now. Yep, 17.1960. I'm not too worried about it. I'm in the positive. I'm still in the negative for the day, but eventually I think this is. I don't see why it would turn around. Especially if I look at my indicators that I use. Sometimes they're not the best indicators, but they do work well together. As to where right now both of them are saying sell side. It doesn't take, especially in a 5-minute chart. I can turn this around to a 15-minute chart, and it'll try a little bit something different. As you can sell side just a little bit. That's okay. It's probably just because it's gonna come, and that's all. That being said, what I want to do is I do want to go over what happened this week, right? As far as my trades. Didn't work very well, did it? Go to trading view instead into the word trade. That might help out a little better now, wouldn't it? Click on my name here. Go to trades that I had for the week. And what I did is I actually put together a spreadsheet of the trades that I did for the week, and I basically put together you know, the pips that, or the, you know, the lot sizes that I would have, you know, would have had, I would have had for the pips. It would not directly telling you, you know, what exactly how much to risk or how much to wager or anything like that. You know, that's going to be something that you're going to have to decide on your own. But basically what I'm saying is that, you know, this week, starting off with a $500 account, if we and I even say, you know, if I took off 50%, you know, then there was a specific amount that I took off, that was 50%, you know, there was 0.05. If I said I took off 30%, then I took off 0.03. I basically took everything as if I traded everything as a 0.1, right? Everything as a 0.1, and then we dwindled it down from there from trade. So starting from 323 going all the way to 326, right? We go through all those trades, and what we come up with is that if we would have started off with a $500 account, right, we would have ended up with a $1,834 or the $1,834 account, making a 366% change. That's a pretty big change, right? And that's just off two symbols. That's just off NASDAQ, and that's just off SPX. So this is what has got me thinking maybe I should probably start doing this sooner than later, right? Because if we're able to get these signals out there, and we're able to get people to, especially follow these signals and make this kind of money, you know, that can be made just from following these signals, I don't see a problem, you know, trying to start this a little bit earlier, getting people to start making money a little bit earlier, understanding that they can make money with my signals, and then eventually understanding that that not everything comes for free. I'm sorry, I can't do this for. The whole point of me learning and doing this is to make a career out of it. So I want to make this you know, a job for myself. I don't want this just to be you know, a hobby I do on the side, you know, where I help people. No, I eventually want to quit my job, and I want this to be a full-time, you know. So first we start off with NAS, the V-shaped bear to bull, which almost 100% came true. And depending on how you played it, you know, it definitely came true. It would just depend, like I said, it just depends on how you played it. But the way I played it was I played it to, if we hit play, it'll show you exactly what happened, right? So you know, it came up into here to where I shorted it, right? Go down here to where it shows you it came up in here, I shorted it. So what happened? It shorted, you know, took some profit out of low, right? Marked out the next low to where I could take a profit, and then I realized that there was a mitigation point. right? And at that point, that's when I said, hey, take profit, you know, and then you can either do two things. You can either set your stop loss to this point, you know, to where I don't think it's going to get any higher, or you can protect, you know, your entry and then enter later if you want, you know, that there, you know, and then go down. I said I'm going to protect my entry and enter and later. So like I said, stop archery, the mitigation threw me off. It still made profit, protected my entry. I'm now waiting for, you know, Powell to speak to see what kind of happens, you know. And I said it ran above the intermediate highs, which is what I was expecting, and it kind of changed my analysis. Now I didn't specifically say I shorted here, but if I was in a Telegram group, I didn't have time to just go out there and say, hey, short now, but I would have. I would have said, hey, short here. Because the thing is that it got down to the entry that I wanted it to. It got down to the 1300 entry, exactly where I wanted it to go. So if we go back to here, you can see it came up to here, and even then, we would have took my stop loss and maybe just raised it up a little bit. We still would have been in this trade, you know, got all the way down to where I would have wanted to you know, exit the trade at, and then still also entered another trade going the opposite way, right? While also taking out a profit at somewhere, if it, my thoughts was the 1,030, probably close to these highs, as previously, which was 1,160. It wouldn't, what is my call, 1,160, just because that would have been a safe spot to call, and it actually got to that spot. So that's where I would have called it personally, if I would have had a Telegram channel and been able to call this. So all of that I put in the trading journal, right? I put that in this trading journal to say, hey, this is what I would have called. I may have to zoom in on it a little bit more, but we'll get into that in just a second. So, oh, actually, I might as well go ahead and zoom in. Let me. Okay, so as you can see, you know, the NASDAQ one here, fair value gap to breaker to order block. It was the short. Then wait, that was the one that I was talking about, and then the other short. Then that's when we realized that it went the other way. So you know, I still took a little bit more profit, but I took my risk down to zero, right? So since I took my risk down to zero, it came back up, knocked me out. That's fine. Out of that trade alone, we would have made $134 just on one trade. Just on one trade, or actually, what, $103 on one trade, and then $33 on another. So that would have been about, yeah, about almost $140 just on one trade, right? So, and then it actually, once it got down to the level that I wanted it to get to, which was a 13,000 level, we would have went long, right? So that's where I put the long in here. And so on the first long, if we would have got the 13,000, got up to the 160, that would have been 1,600 pips, making it 400, especially if we're doing it at a 0.03, which is what I, again, started everything with a point one, and you know, if we'd have broke even, then, you know, a little bit, but whatever. So I put that as a 0.03, big thing as a 0.03. We'd have made $480 out of that one, just from going from that that's 1300 going long to call. That would have went to 1600, or that 160 or what it is. And then also the same thing. To go back to that, from that 1300, I even though I didn't really have it laid out here, this still would have carried over to the next day, right? That 1300 that I called from this would have carried over until the next day. Down here was that 1300 that I was talking about, entered in last time, right? This is where we entered in, so I stayed in it. You know, I would have said 1160. That's probably where I would have had my exit, just because that's right along around where the highs are, right? And just to get out at a safe spot, 1160 would have been perfect. So we would have nailed that as far as the profit is concerned. And then so whenever it came down to here, I said I would have risked 0.03 and then called another long, just because it just seemed like it was going that way. Well, this was, this is the one where we took the loss. Well, we took a loss on one trade. This trade we didn't take a loss on. This trade we still made, if we had the other 0.03 running, we still would have made another 67 times 3, 180 bucks out of that. So, but with a loss of $30 times 3 was 180 bucks as well. So it would have canceled basically each other out, because from here to here would have been a win, and from here to here would have been the loss. That would have canceled each other out. So we still would have had a good winning trade out of that. So even though this was the one that was a loss, it still would have been considered a win. And then so move on to the next trade, where I say I try to be honest, and I try to do these things ahead of time, and I say, lemma, it just depends on where price reaches first. But I try to spell it out for you ahead of time, to let you know what I think is going to happen. I said if it moves into this gap, likely to go short. That's what probably going to happen. But if I don't see it change bullish, soft highs are around 39.08. However, I see Friday to be a turnaround to those highs, so I 38.86, push down into 38.64, and then turning around to bullish, reach 36.64 first, meaning if we go lower first, if actually go up, then I say that we're probably going to go for a long at that point. See if we can get near those breakers around 38.54, and then go on up to those highs at 39.08. So I basically laid it out for you to say, hey, if I see it go up here first, I'm gonna push down. Once we get down here, then we can buy and push up. Or if it goes down here first, then we can just buy and push up. What did it do? It did exactly what I thought it was gonna do. It pushed up into that area to where I thought it was going to. It pushed down into that area to where I thought it was going to. And then it pushed back up into the area right past where I thought it was going to. So I called this one almost 100% perfect. I mean, there's the only thing with this one is that as I'm going through and I'm calling it, if you're reading it and if you're, the thing with TradingView is that if you have this open, right, not your watch list, but your time, but your ideas open, right, my ideas will start popping up especially if you have me followed as a favorite, my ideas will pop up as first, you know, and then see those pop up, and then you will know that, you know, that this is where I stand at this point. And so what I do say is I say, okay, those drop a little bit, you know, let's just go ahead and take some profit here, right? And actually what I did is I took 50% profit right here, and that was only, you know, barely in the beginning. And the reason I wanted to take 50% profit in the beginning is just in case it did jump back up and take us out, we would have still had profit, but we would have still had 50% to play with, right? So we still had 50% to play with, which is plenty of money to play with. So and then I say, you know, it starts getting a little bit lower, and I say if you want to take another 10% now, you can guarantee that your profit, well, you'll stay in profit even if you have the stop loss. I did not. I was just telling you that in case you wanted to. I say your next take profit level is 38.69, right? Hit the next take profit level, 38.69. I say take another 30%, right? Move your stop loss to break even, right? Boom, it even gets down to here. We still have 20% left to play with if you didn't take the 10% that you know to do whatever. So I say don't take 10%. Don't take 10% here. We still have another percent, 10%. We can, you know, leave as a trailer, see if it gets any lower. And then at this point, I can, of course, I understand it's probably going to start. Like I said, I wanted to see if it wanted to get down lower. And these are just numbers as if you were playing with $5 per pip, right? These weren't the numbers I was actually playing with. This is a hypothetical, as if you had $5 per pip instead of, you know, what I was doing, which was 30 cents per pip, 50 cents per pip, things like that. This could have been a $6,000 day for you if you had, you know, $50,000 account. So, you know, you could have grown your account from whatever it was to $6,000. But instead, what we did is we actually grew it quite a few hundred. And so what I did at this point is I said, close out your trade, right? Whatever you've got left in it, and buy. Because at this point you can buy and you can still make it to 39.08 if you wanted to, right? But here at this point, I say I'm gonna stop. I say I'm getting too greedy, and I don't want to overgreed it. I don't want to overgreed it. I don't want it to go against me. You know, we've already made enough money, so I make this much. You know, we get up to this point. It's about, you know, 10 handles or so, about 100 pips. I just close out the trade, you know, and I just say, you know, let's call it quits from there, right? Go to the trading journal and go to this SPX one. Here it is. You know, here that basically 50 cents per pip, right? 860 pips would have been about 43 bucks, right? And then here, take another 30%, which is point, you know, you can see it or not, which is 0.03 at 1760 pips, would have been another $52.80. And then here it is, another 10%, which is, you know, $1 per pip. We made another $29 off of that, right? So, and then after that, whenever I say close out the trade, you know, it moved up a little bit more. It would have been another $19 off of that. So, you know, that's a 43.50, you know, 29.16. That is a well over $100 and something dollars you know, just by playing. And again, a lot of that was just because I took that 50% very, very early, and I probably shouldn't have. I probably should have took about 20% very, very early, and then waited and took about 50% at the very, very end, and then we would have ended up with a couple $100, right? And then I turn around, and then I, you know, and then I go for the long at, you know, at wherever it was, at the price it was. And I go for the long, and I, you know, long, I would have went for 50 cents, you know, per pip. And I closed it manually, and it was 111 pips, which should have been, you know, $55. You know, and but I could have let it keep going up until 39.08, which if 50 cents per pip where it was, that could have been another $200, right? But that was just me. I closed it early because I had made enough money on the way down. I didn't want to let greed take over. But somebody like you who would have read that and, you know, saw that and said, you know what, I can let this keep going and manage it myself, and, you know, maybe take a, you know, 10% here, let it keep going, maybe take a 10% here, let it keep going, take another 10% here, like, and you could eventually would have made your way all the way up. However much it would have been way more than $55, I'm sure. Right, so then that brings us to the 26th trade, which was the last day. So this was the Friday, right? That Thursday call was awesome. That was, to be honest, that couldn't have been a more perfect call, to be honest. It to come up and hit exactly where I wanted it to, come down, hit exactly where I wanted it to, and then come back up exactly where I wanted it to. I mean, okay, I'm not trying to toot my own horn here. Again, it's not that I'm not taking signals from people. I literally have a mentor that teaches me how to read the charts, teaches me how to read the algorithms, teaches me how to read specific things, right? In a way that I've never seen anybody do before. So because of that, it has helped me tremendously. And you know, as of right now, I've only put a 0.01 in on this Ethereum, but you know, I'm up $5 right now. Still, you know, these are just little things here and there that I've learned, that I've picked up, that I know I can do. So here we go. Here's the last one. All right, SPX. I put, again, this one had had 3 different options that I chose before I even put this out there. But this was the original one, right? This is the original one that I wanted to happen, right? This is why this is the original one I wanted to happen, was because, well, for one, I found that this was the low, right? That, but it probably shouldn't have been this one. This one did not break a significant high. So this is actually my fault right here, for putting this fib at the wrong spot. This fib should have actually been at right here, right? Because this is where it broke this high. So this fib should have been moved from here to here instead, right? Which have actually would have moved, you know, my 618 down a little bit lower, and would have gave us a better entry. But that's neither here nor there. Okay, so what I say is that what I was hoping what would happen is that at the beginning of the bell, right? Sometimes this happens, is that the prices tend to flurry, right? prices tend to flurry at the beginning of the bell. You never know if they're going to go up. You never know if they're going to go down. And I go in an array of different ways just to confuse people. They do it on purpose to confuse people. But as long as you can read what's happening ahead of time, then you can understand how to effectively trade the situation. But I did see, you know, we were going higher. We did have you know, a liquidity point above here, and I knew we were eventually going to get above this liquidity point. So that was my thing. The thing is that once the bell opened, well, actually, what I called was that, you know, it could do that, but it also could fall actually below into here, into where these big gaps were, you know, like what happened with SP or with NASDAQ. It could have fallen all the way down into here, right? And if it's gonna happen, I was gonna wait fell to first before I pulled the trigger, and I would have made a call from there. And then here I'm looking at the 4 hour, and I'm seeing the 4 hours has an opening at 39.13, so they'll pull back down there before moving bullish. Oh, there's a lot of moving parts, but I'll try to let you know what this is before SPX moves. And SPX just starts moving up, and it doesn't come back in and fulfill my you know, my limit sell. So I had to think of something, right? I just couldn't let the day get away with, you know, from me without making some kind of money. So here I go. I say, after watching a highs price move back and forth above and below, to get people to chase the price, personal opinion is to wait as long as possible and go long. Meaning to wait as long as possible for the price to try to get down as low as it can, then try to take a long shot after that, because I knew it was going to go long. I knew it was going to go long. I knew it was probably going to hit this breaker and then fall backward. That's why I was thinking, if we can get in at, like, you know, 38.20, something like that, and then get up to like 38.39, then that would be perfect. You know, that we would have made 10 handles on the day, and, you know, that would have been a great trade with 10 handles on the day. If we would have had it, you know, not dollar per handle, but basically $1 per pip, which would have been $10 per handle. That would have been $100, right? So that would have been good enough for me, if, you know, for a day. So here I say, what happened? You know, so I say I personally jumped in at 39.29. Now, as you can see, whenever this pulled back, like I said, wait for it to pull back as far as it can, and then jump in. And then, of course, here, let me click on this. Let me show you why I jumped in where I did. It was because of all of these being at all these highs right here, you know, and then it jumps up really quick, and then it pulls back. Well, when it pulls back and it gets to these all the same highs, you know that that's where it's going to start going long at again, right? But that's where I pulled the trigger at 39.29. I pulled in the trigger at 39.29, and then I waited until it got to that top of that breaker, 39.39. I said that was what I was expecting. So, and so I say I pull 50% profits off at 10 handles at 39.39 up at the breaker, which would have been a pullback. Then I pull my stop loss back to 39.25. I'm still at a profit if I hit my stop loss. So as it's going on, I said it's not looking good. I take another 30% off at 39.33, 3.4. I moved my stop, and I even show you where I took my, where it was. I put my stop loss to break even, and it's about to break. And again, this is trading view, so it takes a while time to get there. If this was Telegram, this would have been a lot faster. You guys would have gotten information a lot quicker, and been making, hopefully type of that I was making. So here we go. Comment knocked out. Checking to see if there's anything else I can try with SPX. Well, what I had forgot was that after it had made this high, right? It had made this high in SPX. Okay, so let's here. Go to here really quick. Bitcoin. I'm gonna go to X100 where the CFD is, right? Contract for difference, which is where MetaTrader 4s are. And here's what happened. Right, so I buy here, right? It goes up, right? I got 50% here, and I took out another 30% down here. It comes down, it knocks me out. Well, what I didn't realize is that my original trade is still in play. I go back up here, original trade that I had set at 39.20 is still in play. So I still had a buy limit set 39.20 that I honestly completely forgot about. So if we get on here to 39.20, which is at the 618 area right here, and then I aimed for that. Where did I aim for? I aimed for 39.45. I think this is exactly where I had. And look what happens. Comes down. It hits that exactly. I mean, it couldn't have been a more perfect shot. Comes down, hits that 39.20 exactly. And then what does it do? Boom, takes off. And then not only does it break that 39.45, but it just continued on, and that was something I didn't expect at all. It got to 3 times the amount of the original trade that I thought it was going to get to. Generally, it only gets to about, 127%, 150%, something like that. This one got to 300. I didn't expect that at all. And I'm looking over here to the left, and I'm wondering, why did it get that high? And especially with everything else that had happened here, I mean, you had a negative order, yet you had the middle part of a negative order block. You had, fair value gaps. You had all kinds of stuff. And it was this area right here, which is what stopped it. Which was basically a breaker. It was a breaker is what it was. So you had the high, you had this low, you had this lower high. So because of that, you had a breaker. Probably somewhere down in the bottom of here. All the way across. Right? And that's what caused it to finally stop. And that's something I didn't even think about. I was just thinking about trying to get above the first part. I was just trying to think about getting above the first high. That's the only thing I was trying to think about, getting above the first, which we did, and that gave us another how many points? 25. So 25, and I think I had it set at 0.1. So that would have been, you know, a dollar per pip, which would have been 250 pips. So that would have been $250 right there. And I have that, put that into my trading journal. Been $246 right here. X, the 0.1, you know, was the original trade I had set at the buy limit order. It just hit before the closer on 2 p.m. Did not expect it at all, but the buy limit was already set. Didn't even think about it. So if you go through this and you go through profit that we had, if you would have started just at a $500 account, would have ended up that week with the $1,834 account and 4 cents, which had been a 160% increase. And that's just off one trade each day between SPX and NASDAQ. NASDAQ one day, NASDAQ second day, SPX third day, SPX fourth day. That's all it took. And you would have grown your account that much. You don't have to have 16, 17, you know, trades a day between Euro, you know, GBP and GBP franc and GBP JPY, Euro Canada, right? All that stuff. You don't have to have all of that in there. But I realize is I just need to focus on one thing, and that one thing is going to be the indices, because that's going to be my time is going to be spent. Going to be studying these before the bell opens, right? Understanding what's going to happen next. So for those of you that want to, you know, follow me and get into my signal service, this is more than likely what's going to be happening. Now, you don't have to trade this type of you know, you don't have to do, you know, like a 0.1, you know, for every trade. That's kind of high, especially when it comes to you know, indices, unless you have a $500 account. If you have a $500 account, it's not too bad. You know, it's kind of high for something like NASDAQ. That would be, you might want to start off with something like more like a 0.02, 0.03, something like that. But with like something like SPX, yeah, that's not too bad. Starting off with a 0.1 is not too bad, especially if you're 500. If you have a $100 account, it doesn't matter. Be careful with the NASDAQs, because those are going to kill you, especially if I have a very, very high stop loss, right? If you have a $100 account and my stop loss is at $40, that's going to take out, you know, and it hits a stop loss, you're going to be at $60 in no time. And I can't guarantee you that, you know, more than likely we'll make that up, but still it's going to be harder to come by, because once you get lower in NASDAQ, the less you get to trade with it. Then you're going to have to focus more on the SPX side instead. So, and that's why I kind of started focusing more on SPX toward the end, in case people didn't really have the money to trade the NASDAQ, that they could actually focus on the SPX, because it's a little bit more easier for them. Yeah, granted, it may move a little bit slower, but that's kind of good, especially if you're somebody that's working, right? You know, and has a job, and you know, and maybe able to only get to check the phone every now and then, can quickly just, you know, readjust something really quick, you know, hit your stop loss or you make a profit or something like that. Those kind of things are what you need to have have those kind of perfect trades. But if you're a day trader, you know, you can wait all day around, you know, all day for these kind of things to develop, and you don't have to take, you know, the profits that I'm taking, taking half of my trade just at 10 handles in, whenever I could have take, you know, 20% at 10 handles in, and then left that other, you know, 50% for, you know, what would have been the 30% and made a lot more, you know. So eventually it's going to be one of those things that you're going to have to, you know, kind of, I'm not going to be able to teach you how to trade with every single dollar amount that you, that's going to be something that you're going to have to be comfortable with and knowing how to do yourself. Even if you know, you start off with a NASDAQ or you start off with an SPX and you just want to do a 0.1, right? You just want to do a 0.1 trade and then see how far you can take it before you can exit, and then hopefully you can make, you know, 30-40 bucks for the day, you know, especially if you have a low account, you know, like $1 account or 120. Maybe that's what you got to do. But if you're somebody else that, you know, has a couple thousand in your account and you can risk $2, you know, for, you know, a 0.2 on a NASDAQ, then by all means, or a 0.5 or even a 1, you know, a full lot on a NASDAQ. So you can risk that, then hey, by all means, be my guest. Do it. But I'm just showing you that with all the trades that I had called this week, if I had put them into a spreadsheet, right, this is what that spreadsheet would look like, and this is what the account would look like right now. If I was to do it, you know, in my in the way I called it, you know, then taking 50%, taking 30%, taking 10%, taking, you know, however much here, starting off with a full, you know, 0.1 per trade, you know, this is what it came out. So if you would just started, if all of these were just a 0.1, you know, it probably would have came out to at least still a good 100%. What I probably should have done the math on that, but it probably still would have became at least double, you know, what you started with for that week. Easily it probably would have came to double what you started with, no doubt about it. That being said, that's why I want to get this rolling and up and moving as soon as possible, because I have a feeling that now that I know that I have kind of a niche, I get not really a niche, but like an area that where I'm going to concentrate on, which is going to be the indices, because that's going to be the easiest place for me to focus my time and my energy on. Not going to be able to get up at 4 o'clock in the morning and try to, you know, study the Forex market and try to get you Forex signals, you know, out by like 6, 7 a.m. You know, that's just not going to happen. I'd love to. I'll still try, but if anything, it's going to be more for like scalping purposes, trying to make, you know, 10-20 pips here and there, just to keep count up, you know, just a little bit more. And there's nothing wrong with scalping. I mean, nothing wrong at all with scalping, especially if you're going to get your account up. especially if you know exactly how to scalp and when to scalp. Because if you do know how to scalp and when to scalp, that's just gonna make your account grow even faster, bigger. That's all I gotta say about that. So again, that's just what I'm throwing out there for now. Again, follow me on Patreon. How you do that? We're gonna go to Patreon, and you can find this in my description in my link, right? Patreon.com. It's gonna show my creator home, but here, it said Patreon.com. It's gonna be Bodies X, right? Patreon.com/Bodies X. I know I only have 2 subscribers right now. I'm hoping to get more. Thank you for the 2 that have subscribed to me so far. You guys have been so great. You know, especially whenever I have done my little videos and stuff for you guys. You know, just for the Patreon people. You guys have responded well. But I have made posts just for Patreon people. So again, all it takes is I don't know why this says $5 a month. I think it's because there's one person that's actually coming, or he may have actually why it is $5, because it's supposed to be $3 a month per person, $6. Maybe it's because the other person's coming from another country and they're taking $1 out of it. I think that's what it has to do with, because exchange fee. I think that's what it has to do with, if I'm not mistaken. But anyways, that's neither here nor there. You guys probably shouldn't. So tell your friends about Patreon. That way they can get into here. That way, whenever I start doing my Signals channel, share the Signals channel. I'll put it in here in the Patreon page. I'll put it as public. That way you don't have to sign up, you know, to my Patreon just to get it's eventually going to get out there anyway. People share things. But if you want the discount, right, then that's where signing up is going to come handy. Because if you sign up, you know, if you're going to be a Patreon member and you want the discount for the Signals, I'm only going to charge $20. Everybody else, and it depends. I may do different levels too. It just depends. I may do like an extra, you know, Dow Jones level, with like Bitcoin and stuff like that. You know, for Patreon members, I'd probably do, you know, just add on an extra $10 a month. But for, you know, people that are non-Patreon members, they have to tack on an extra $30 a month. That I'm probably gonna start charging them initially, you know, $50, something like that, for this kind of service. You know, if it's proving to be this profitable, I don't see why, you know, me charging something like this wouldn't be out of the question. You know, I see people out there like I said, charging $120 a month, or, you know, $200 a month, or but then again, some of them also have like different services that they do that, and I'm just going for the Signal service. And eventually, once the Signal service is off, then maybe I can start getting into the account management and things like that, and that's when it'll turn into something. You know, we're just trying to get to the Signal service, get, you know, Patreon members, $20 a month, maybe 25 if I have to. Really don't want to go 25, but I may have to do it. And people above that are probably going to be somewhere around anywhere between 60 and 80 a month. Again, still ironing out the details. Once I get this the trading view link completely finished, which I do have, and some people already do have the link. You know, gonna fit in a lot better. Gonna make things come together a lot easier than what has been happening. Anyways, that's not for sure if I have any more for you guys. I have been talking for about an hour and 15 minutes. It's a Saturday night. I know people are out doing things and nobody's listening to me right now, and I don't really care. The main thing is that this is probably gonna come out Sunday morning. People are gonna watch it. Tomorrow I'm gonna do a video on indices because that's gonna be my main focus. I'm gonna go over SPX, NASDAQ. I'm gonna go over the Dow. Right, we're gonna see what kind of setups we can on Monday if we get a trade on Monday. Typically I don't like to trade on Mondays because Mondays are gonna be the days that are gonna kind of give us, you know, what's gonna happen in the market. It's gonna be primarily your Tuesdays, your Wednesdays, and your Thursdays is what we're gonna have our heaviest trading days. Sometimes we might have a NASDAQ and a SPX in the same day. Fridays we'll probably have a counter trend day. Counter trend meaning, let's say SPX has been going up all week, and then generally Friday the SPX will go. Something like that. Something to expect. Just to throw that out. And then of course, I think something Bitcoin, Ethereum, things like that I'm gonna pay attention to. Try not to push those as much, just because they have such a high spread on MT4. But then it also, again, I'm also gonna be putting out alternative, not alternative, but all, you know, alternative coins, I guess you could say. Some altcoins, you know, for trading, especially for those of you that are leverage traders that like to leverage trade. Some trades are better than others at leverage. I've been studying a lot of different coins over the weekend, and we're just gonna have to see where we end. Who knows? It could end up being that's really good. It could end up being something that's really bad. Who knows? So we'll figure it out together. Anyways, again, thanks a lot for hanging out with me and understanding exactly what I'm going through, you know, where I'm going through, and hanging in there with me for all of this. Again, spread this, tell your friends. Again, once I get this Telegram channel, I'll give it to you guys. That way, give it to your friends, and that way we can get this ball rolling. I want to get it rolling sooner than, because hopefully, if we can get this ball rolling sooner than later, I might be able to quit my job by. But no, I really don't plan on doing that. My mentor told me that he waited a very long time job. Took him about 10 years. That's probably what I'm thinking. It's probably gonna take me before I quit my job. But in the meantime, have this signal service. It's going to be a lot of administrative work to and keep up on who's paying and who's not, and that, and it's going to kind of be a whole nightmare and flesh it out. And so it's going to take me some time, and hoping that the price is going to be worth it for the time and effort. Even though if I have a price that I say I'm going to put out there, if you feel generous enough to more, please do so. you feel generous enough to donate through any of my other ways you can donate, you can do that in the description below. I have my PayPal link, I have my Bitcoin wallet, I have my Cash App, I have what else? Basically any way oh yeah, the support the stream link that you can add funds through there. There's all kinds of ways that you can help me out to keep this channel going, to keep my internet on. Sometimes, you know, even though I do have a decent job, sometimes it is a bit of a struggle, and hope that things will continue to prosper for me, for you. Again, thanks again for watching. Thanks again for everything that you've done. One last quick look at Ethereum before we get off of here. At right again, the green line is right where my entry is. Like it's a low breaker than I wanted it to. Maybe that breaker die. And we'll see. I don't want to close the trade yet. We'll see what happens in the. Thanks a lot again for joining me, for scanning and enjoying me. Hopefully enjoying me. Hopefully I'm entertaining enough. Hopefully I don't bore you to death. Hopefully I, if you want to tell more dad jokes, I can do that too. But just hang in there with me. Promise I'm gonna get everything going as soon as possible, and we're gonna all be able to make money. And I'm not just gonna be this random person out there just trying to sell you. I'm gonna try to be the person that try to guide you every trade that I make, letting you know ahead of time what trades I'm looking for, letting you know ahead of time what I think these trades are going to be doing. I'm not going to be going buy here, sell here randomly out of nowhere, and then by the time you get that message, you know, prices already moved 10, 20 pips or something like that, and you're screwed. You know, I've been a part of those people before. It made me so angry. Buy here, and then I will go look, and I'm like, it's already moved 10 pips past that. Like, the point of doing that now? Anyways,